Hi, Ashwin.
Hello.
Welcome back to this channel where we talk to you and get your guidance and direction about the stock market, how to make money, and of course, improve our financial intelligence. Good to have you on the show today.
Tessie, I have news for you. The stock market is finally back.
Wow, after 14 months, we have finally come to the end of the volatility.
Let me explain to the viewers why we say that the stock market is finally back. Morgan Stanley Investment Management now says the S&P could rally towards 4,600 into the end of the year as markets price in earnings recovery in 2024 and investor fear of missing out kicks in. Bank of America equity strategist Savita Subramanian has raised her year-end price target on the index to 4,003 from 4,000 previously, with a new range of 3,009 to 4,006. Now, Citibank's global strategy team has upgraded its view of the US stock market, counting on AI driving outperformance against other global markets when the Fed has done hiking. Now, Citibank boosted its view on US equities to neutral, having been underweight against other major markets. Now, despite a choppy May, US equities have remained resilient to a series of headwinds this year, from high interest rates to turmoil in the banking sector. Still, the S&P 500 is up more than 7% in 2023, while the technology-savvy NASDAQ 100 index has rallied 24% this year alone. Now, from here, you can see, frankly, the NASDAQ is not bothered about inflation anymore because it's got a bigger catalyst to deal with, and that is artificial intelligence. So now, as I've been saying in my previous videos, we have two economies. The old economy that is reliant on inflation, okay, and the new economy, which is tech, that doesn't care about inflation. So I want investors to take note of this. The new economy is moving on its own momentum. Last week, now here's big news for you. Last week, investors added 21 billion US dollars in new long positions on the S&P 500. According to data from Citigroup, one of the largest weekly flows of new long positions tracked by the firm in recent years. And Goldman Sachs reports that hedge funds bought US shares for 2 straight weeks, with purchases reaching the fastest pace since October after a bout of persistent selling.
This is really great news. It sounds like you've really done your research and can back up your claim that volatility is coming to an end. So that's good news because it says the market's coming back and therefore opportunities abound.
That's correct.
Tell us how we can make money from this, how we can position.
One step again, Tessie, we're back to buying quality companies and earning active income. And high net worth individuals can buy these quality companies 5% below the market. And other investors can also buy these companies using CFDs by only paying 20% upfront. That's the first way.
Okay, right.
The second way is going to blow your mind. A managed fund pays out 8% per month. That translates to 2% per week. And this fund only trades in FX and commodities.
So European managed fund that trades only FX and commodities.
That's correct. And because it pays such good returns, 8% a month, 2% a week, your ROI can be covered in just 8 months. Meaning after that, every single dollar that comes in is pure profit for you. And just to let you know, Tessie, in the last 4 weeks, you have made 21.4% from this managed fund.
Wow, thank you. So now that we are poised for an uptick, so this is a good thing to get into, managed funds?
Because don't forget, with this managed fund, I'll elaborate further later, you get 2% per week, 8%, 2% per week, 8% a month. That's in addition to making 20 to 30% a trade from quality tech companies. So here we are building for you a recurring income every single week. Now, the third way is a staking fund, which does not trade. It pays you 1% per month, which translates to 0.25% per week. So total, you have recurring income of 2.25% every week until the market climbs further. Until the NASDAQ climbs further, you can earn this money every single week, 2.25%.
So it's the managed fund and the staking fund that work in tandem.
Yes. And then you have, of course, the quality companies where you make 20 to 30% per trade, not per year.
Okay. So you could do several trades a year, perhaps 2 or 3.
Yes, correct. Our clients have been making, in the last 3 months, our clients have been making 20% per trade from 7 companies. So think about it.
I think it's a lot and it's super exciting, Ashwin. I myself flooded with questions. I think those of us who are interested in making money should call you and talk to you about their personal portfolios. How do we get in touch with you?
Before I sign off, let me say something. The AI revolution is real. It's not a fad. To add to this week alone, investors have bought 270 million of gold ETFs because they're waiting for the Fed to relax and that will cause gold price to go up. And this week alone, investors have bought more than $1 billion of small cap ETFs. This is big news. You can contact me at bit.ly/algotrader, which will land you on our WhatsApp page because our website, algomasters.com, is still under construction. I have to say this. This is right now a once-in-a-lifetime opportunity to buy quality tech stocks at low valuations. This is it. Okay, so you should
just as the market will get move upwards.
That's correct.
This is the time.
And now we've got a huge catalyst. Like I said, AI is a huge catalyst never seen before.
I think we should all get on the phone with Ashwin, and thank you so much for doing what we said we would do, build financial intelligence. Thank you so much, Ashwin.
Jesse, once again, it's bit.ly/algotrader. Thank you so much for inviting me.